weekend all. Ira Epstein, and here we are with your financial market wrap-up, your weekend edition for this Friday, the 8th of March, 2024. I know I need the break, and I might take off a day or two this coming week. You never know. Monday, by the way, there's no major U.S. economic data due out, so I'm not showing anything that's coming. On Tuesday, you get CPI, and on Thursday, the PPI. Now, as you know, you saw today's numbers that came out. And basically, the market looked at one thing. And first, it looked at a bigger jobs number. Okay, the jobs report showed that, but a lot of revisions. So many, you would think they can get this right. I don't know if that's because of the beginning of the year or what, but massive revisions. They did get one thing the Fed wants. Unemployment jumped to 3.9%. So we got part of what the Fed wanted. And at first, the market liked it, but then by day's end, the market had given up and all the indices closed lower. NVIDIA had a real run, gapped higher, made new highs, and I warned traders, and I don't mind saying on the ETF today, I told them to take more money on that move and put in a stop near the day's low early in the day, and by the end of the day, it was down another $70 from where people took some more off the table. So it's been a good run for them. I admit I haven't done anything in the futures. Haven't been hurt, haven't made any money. So I've left money on the table, in my opinion. Certainly the gold market's a power. Most of the metals are up. Copper, you got to be just a little careful with. We want to get through with China, read a little bit about it this weekend. What are they actually up to? Are they going to do anything to help the economy or just talk that they're going to support the economy? All the energy markets down a little bit. No peace between Israel and Hamas. So we're going to go into Ramadan. And as you get there, the question is, what kind of problems will there be? In Chicago, we already had people this morning blocking traffic right in the center of the city. They all got arrested. They were pro-Palestinian. And they wanted to make their statement that Israel's got to stop. And they just ended up doing what they wanted. They wanted to make a statement, and they got it. Well, what's going to happen over Ramadan is what we're all concerned about. When we take a look at the S&P, you can see how the market has come up, and still for the week, I know it was down, but I take this back, for the month so far, because this is the monthly version first, then we'll go to the weekly, you are still up a half a point. For the week, you're down 0.33%. I'm so used to doing the weekly chart first, it was in my head there. All right, so we got a small setback in the market. You can't argue that the trend has been pronounced to the upside. It actually began, I remember, October 27th. That was about the low in this market, and it just zoomed all the way to the upside. I had done actually 2 special reports on the S&P and caught the move, that part in my reports. No question that was right. I thought we would get in December more sideways action than this. I was hoping for it to go a bit more, and then I was looking for another surge. Well, we're getting that surge. So now the question for the market, and just think about this, is the news that unemployment is going up good or bad? That's what you got to ask yourself. It's good in one sense because it gives the Fed the confidence their programs are working, maybe. If they can see it get up to the 4% level, I would think that triggers a lot of discussion at the Fed. Should we get ahead of the curve? We don't want to see it get to 4.1, 4.2, 4.3. So those are things you'll be looking at. We're certainly going to have this week a lot of discussion on CPI and PPI. All right, can this market afford to settle back? Well, that's the big question. If it does, where's the support? This number of 48.22, let's round it off to 48.23, just for the sake of that. It's jumping each week by what? 40 points, about 60, about 50. So let's call it about 45, 50 points a week. So it's going to come up to around the 48.65 level. That's what I'm trying to show. I can't give you the exact number. It's a guess. But that's your last break low. That's where I think the market's going to look for the first support on a pullback if it comes in. Now, from here, that's 300 points. I'm not saying it has to happen. I am saying that's the first support that makes sense with the break low, the way that I've just given you the calculation. You can see how the Bollinger Band's far away. You'd have to go to 52, 51. And what people forget is this market did get up this week to a high of 51.93. And if you'll remember, how many trade analysts were looking for 5,200 this year? So as you approach that number, you may disagree, but the market absolutely did close lower. It gave up that ground. 1 week doesn't make a trend, but you're approaching an area where people are taking some money off the table and doing a certain amount of rotation. In terms of the swing line, until it closes under 79, getting to wherever that 18-day average is going to be a difficult task. I would assume the market will be looking for support on breaks, but I'm not convinced you'll get a lot of early support until we get CPI and PPI, especially the CPI number. That'll be a very important number, and traders will either go, they love it, or they hate it. I don't know which one of the two they'll do with that. In the Dow, the weekly chart is in a corrective mode. You've got the higher low, higher high. You're still with the embedded reading. It too can see the market. You can already see how the prices are coming together. The 18-day average and the last break low. It's the same story that I had on the other. The NASDAQ is embedded on the long-term chart. This number should, the 17,025, if you take a look, if we pull back, the week before it was 16,865, 160 lower there, and here about 200 lower. So you're going to be up very quickly in the neighborhood of where that break low is. So those are the things I'm going to be looking at this week if the market comes down to those numbers. Would I be telling you to buy up here in the Russell? No. You're in an overbought market. Let it either embed or give you a correction. This is the first bounce we've had, and it's for the past 3 weeks. It's the first time it's been able to get back over the 18-day average in the 5-year note. It certainly doesn't look like a pattern that wants to run dramatically to the upside, but if it did, this is the area that I'd be looking for the resistance to come in. If you look at the 10-year note, you've got the same thing in that area there. In the dollar index, you went into the bear phase. Now, is it a fake one or is it real? That's going to be the big question. That's the test this week. To make it fake, you've got to get back over 104.24. On rallies, I would expect the pros to be selling. It's, I think, too big a risk for the average person. It doesn't mean the trend isn't down, but it's a $1,000 risk from the 18-day average over that high. So something you have to consider. And in the eurocurrency, the support, I think, will come in at the 108.90 level, or just wherever that 18-day average comes in, with stops back under 108.02. Again, it's going to be a lot of risk in these trades. These are both about $1,000 risks in those markets. In the Canadian dollar, you had a big outside week to the upside. You still have momentum, though, that is strange. You've got an outside week that made a higher high, lower low. And if you really study what this market has done, since almost the second, third week of the year, it has just been hanging in on a weekly basis at the 18-week average of closes and not making bulls or bears very much to play with. The yen, it looks to me like you're making a bottom. Now, this is the first resistance point, 68.36. You get over 69.03 and you have your first real swing from a low. The Bank of Japan will give us an idea this month what they want to do. The market is anticipated. It's just come from 66.49 all the way up to 68.09. So that's a heck of a rally. But take the name off the chart. Take what you know. You're oversold, not embedded. You're back to the resistance at the 18-week, but does an oversold chart attract new selling? That becomes the issue for that market. In Bitcoin, it's run, baby, until it's over. Again, it's running the Bollinger Band. Got above it, got back under it. You got 2 weeks over it. You've got momentum that could embed this coming week again. Market's just in a running mode. And if Bitcoin's good, you know gold's been good this week, but we'll do that in the gold chart. And you can see energies have all been coming down. This is the differential between Brent and WTI. They're still slipping down at this point. I remember when I said to you over the past 2-3 weeks, I said, I think we're going to start going sideways. Well, you are doing it in grand fashion. I don't see anything that's going to attract new buying or selling just yet. WTI got up to the Bollinger Band twice and got thrown back, and it is overbought. Both are in uptrends, but because they're so close to their upper Bollinger Band, I teach that you don't buy Bollinger Bands. That doesn't mean you can't get a breakout. You can. Look at what gasoline is doing. But I think gasoline on big breaks is still looking good. So I'm going to be looking in the 235 area because I think that number will climb a little bit there. But you're overbought. I like markets to get away from overbought. So hopefully we get some corrections to come in with for the season. I think that's going to be so important. I cover that and how to do these on the daily charts each morning. And then on the weekend, just like you see me doing this weekend version, I cover 40 charts on the weekend and give traders an idea. And there are times I pull back in the market. And from Tuesday of this week, I just pulled back and didn't do anything. And I'd stay like that until I'm comfortable that the markets come to the terms I want to start deploying trade recommendations for people. So every day isn't a trade opportunity. You may think so, but owning brokerage division, having owned a stock firm, a commodity firm, I think I know what goes on to a large degree. And this is not a casino. You're trying to take money out of the market. Go to iraepstein.com, go to the word research. It's all explained there. I'm Ira. You have a great weekend. And yes, I'm going to get some rest. You take care.